So I went as an auditor and I used to do that. And then I decided to shift into tax. And with that shift, I saw that it gave me better opportunity to work with business owners because audit, in my opinion, tends to be adversarial. And,
Yeah.
you're supposed to look for things that are wrong with the financials versus I believe in tax, you are helping solve problems. I mean, you are solving problems in
hmm
audit, but there's a opportunity to give significant ROI on a tax engagement.
Welcome back to the Massive Passive Cash Flow Podcast. I'm Gary Wilson, your host. I'm so glad to have you back listening to the show or watching if that's what the case is. Welcome aboard. We're glad to have you. We have a great guest today, Eric Pierre, and I think you're going to really like the subject because it's all about taxes. And I tell you, when you're in business, and most of you are in business who are listening, and we know that from reviews, a lot of business owners like me. Once you learn how to play offense and put points on the board, you got to learn how to play defense. And a major part of that is how you manage the expense of taxes. And it's in the right way too, by the way. We don't take shortcuts here. We don't do anything outside the framework of the law. So the good news is the IRS code is the largest writing in the history of the human race. If you look at the sheer volume of IRS
You know,
code, it's ridiculous. No way you could ever be an expert. That's why I have guys like Eric, okay? Because in there are the secret codes that you can use to better manage your taxes and minimize your that one big expense. So, in any case, now that I've told you the whole story, no, just kidding. Yeah, Eric, first off, man, I just want to say thanks for being here. Yeah, I really appreciate you taking your time. I know you guys are extremely busy. My son-in-law is a tax accountant. He's I forget what they call it, and he's does forensic accounting,
yeah,
and
he's a forensic auditor. Yeah.
that's it. Yeah, and I mean that guy right now he's okay. As a matter of fact, they're going to Taiwan, but January through mid-October, you don't get to talk to the guy. So I
Yeah.
know that's why I know we're lucky to have you, man. So welcome
Thank you.
aboard.
Thank you. I actually used to do forensic auditing for quite a while. So,
Really?
yes.
Yeah. And you still are smiling. Look at that, man. That's pretty.
That's because I got out of that.
Yeah. Well, if you don't mind, take us back to what actually got you into this. I mean, was there a pivotal moment of something a grandfather said? It would kind of take us back to that point, if you don't mind, and take us forward,
Well, my grandfather was an engineer, and he was a grandmaster in chess, but it was actually my dad. I'm a second generation CPA. Yeah, I played a lot of basketball, and in high school, my dad sees me practicing in the yard. And then one day he said, son, I'm not getting any letters from Dean Smith, Roy Williams, Mike Krzyzewski, Jim Herrick, all the big name coaches, John Thompson, David Stern's not calling to draft you out of high school. So you may want to figure out another path just in case this doesn't work out. And so I researched accounting and read that it was a recession proof industry. And so that's what I chose.
Yeah, pretty smart choice. I mean, that's
Yeah.
true. Of all the people I've known in my life, I've served a lot of clients, and our team, we have clients from around the world, and one of the probably one or two or three professions that is rock steady no matter what. Accounting is one of them, man, and particularly tax accounting. So kudos to you.
Thank
But
you.
so yeah. Now, when you get into the business, did you have a particular interest in mind, like working with small business people, or was it forensic accounting? Maybe that was your initial
Well,
interest, or
out of college, um, I did have an interest in
Mhm.
tax, and I was supposed to intern with Arthur Anderson. However, they told me,
Mhm.
and it turned out to be a blessing that I needed one more semester of school, and so I went with audit with Deloitte, and in the following spring, Enron happened, and where I'm at in Houston, that changed the city since Enron was basically our Goldman Sachs, and everybody wanted to
Yeah.
work there, and everybody tied to them basically went down. So I went as an
Yeah.
auditor, and I used to, you know, do that, and then I decided to shift into tax. And
Mhm.
with that shift, I saw that it gave me better opportunity to work with business owners because audit, in my opinion, tends to be adversarial. And,
Yeah.
you're supposed to look for things that are wrong with the financials versus I believe in tax, you are helping solve problems. I mean, you are solving problems in
Hmm.
audit, but there's a opportunity to give significant ROI on a tax engagement.
Yeah. And actually, I appreciate you saying that because I just gave the analogy of playing offense and playing defense, and the fact is when you have a good defensive strategy, it allows you to keep a whole lot more of the points you score on offense. Your ROI. It's just I mean, I'll get off the horse here in a second. But I know for me and my business, I was able to after a lot of years. Once we're done development, is eliminate a lot of overhead in the way of payroll and payroll taxes and unemployment tax and workman's compensation and all that kind of stuff. And my income to expense ratio flip flopped, where before expenses were a majority of my gross income and profit was a minority. Now my expenses, my overhead collectively, all of it is
Yeah,
definitely less than 20% now. So it just pays to stay with it, and taxes is a big part of it, man. You know,
absolutely.
so
It's your biggest
yeah. So
expense.
is there a client you had in like,
I'm sorry, go ahead. What was your
yeah,
question?
yeah, was there like so when you got started with into taxes, did you stumble across it? Was there somebody you knew in business that needed help, or what was the your initial foray into that part of the industry, you know?
Uh well, I stumbled into it. Um, I started my tax practice helping some friends of mine in their business. And then, I had moved to San Diego and grew my practice there. And I was willing to work with anybody. I wouldn't do, looking back, you don't have to do what I did because now with social media, you can advertise. But I used to literally knock on people's doors out in South Park. I used to put
Hmm.
flyers on people's cars all over downtown San Diego. Security didn't like I did that. And then I went to every networking event, and then I just people started figuring out I was an authority in that area through meeting and doing well and getting referrals. And so that's how it came to be. And then uh, I decided to narrow my focus on working with primarily, high net worth individuals. And a lot of those individuals tend to have some sort of real estate holding beyond their personal residence. And you
Okay.
know, my two top clients are real estate developers out of Austin, Texas. Um, and I do work with other high net worth individuals and families. But the common thread is a lot of them have some sort of investment in real
Yeah.
estate.
Yeah. One.
Yeah, so I work with some real estate developers. My two biggest ones are Austin, Texas. I work with other developers on the country. A lot of high net worth people that I've done business with, there seems to be some investment in real estate. I myself am invested in real estate. I had some property in Montana I got out of. I'm currently invested in
Mhm.
a renovation project of an apartment in New York City. Wish me luck that, I don't lose all that money on taxes out there. But it seems to be that high net worth people like to invest in some
Mhm.
sort of real estate beside their primary residence.
Awesome. Well, I love your target audience because it's actually pretty much my target audience too. But what is it? Why is your target audience unique? Like, what makes them unique? And you know, and a lot of people who don't, unfortunately, don't have wealth, they're always going to wonder, aren't rich people just have rich people problems? But the the fact is, I mean, as you grow, you know, your everything grows. Your problems grow too. It's not that they don't have problems; they just have bigger problems.
Yes.
But but if you could elaborate on that a little bit, I know it'll satisfy a lot of curiosity.
Okay. So my target audience, my ideal client, now I do work with clientele that aren't rich, but my primary focus on people that make $500,000 more income. And the reason's that number because to do the effective tax planning, we find that people of that income level have assets to invest and strategies where you can get multiples to either mitigate your tax, meaning in other words, you buy down your tax debt and you still get a favorable ROI, or you can defer it. But either way, there's usually some sort of investment component. We find that people at 500,000 and up, that's where it tends to make sense ROI. Now, there are strategies where if you make two or 300, you can make that, but the margins are a little smaller. So that's why I tend to prefer that. But all of us do have clients that don't make that, but our primary
Yeah.
focus is on that area. And then the problems they have are, they they're worried about paying a lot of taxes, right? They think that,
Mm-hmm.
Uncle Sam is going to audit them. Even the reality is, and I'm sure we're going to talk about later, excuse me. But in this book I wrote,
Yeah.
The Great Tax Escape, that came out a month ago, subtitle, Why Making More Money Doesn't Mean You Have to pay more in taxes. The
Right.
IRS audits one out of every 500 returns.
Wow.
So, and in a lot of the strategies you mentioned earlier about legal and stuff, so strategies where you're getting these multiples, in the book I talk about me and my Redeem team, we vet these strategies out. We make sure that it is in alignment with what is stated in the tax code. And oftentimes there are tax opinions or past court cases that can support the case. And you mentioned earlier about the tax code being the largest voluminous individual book. It has 40% more words than the King James Bible.
Yeah. Yeah. It is. It's a lot. You know, so is there, I know there's a lot of rules about this stuff. There's things you really can't um discuss publicly, but other, if you can protect people's names and addresses, things like that, is there an example of something using the tax code that you've done recently that might apply to more people, like dentists, chiropractors, engineers, people that own their own business, like
Yeah,
an
yeah,
HVAC
yeah.
business? Yeah.
I can share
Yeah.
that. And,
Okay.
so I guess something that everybody can use if you have particularly an S Corp, and most realtors should have an S Corp once they're making 50,000 up in gross revenue. So there's a tax strategy called the Augusta Rule, which started in Augusta, Georgia. Those homeowners wanted to be able to lease their home during a Masters tournament, not pay tax. They lobbied Congress and was successful. And so as a you can rent your home, and it doesn't have to be a home. It can also be your apartment. You can rent it to yourself
Mhm.
for up to 14 days a year and get a legal rental deduction off your taxes and pay yourself as non-taxable income. Now you have to have the agreement codified. You need to also make sure you're documenting meeting minutes, but the amounts
Mhm.
is vary because, for instance, renting a place in San Diego, California is different than where I'm at in Houston, Texas. Renting a place in Houston,
Mhm.
Texas is different than, say, Jackson, Mississippi.
Mhm.
So
Oh yeah.
that's one example of something you can do. Another thing you can do is you can, and this would be something for your industry because you all still do a lot of what we call hand-to-hand combat, right? Because to sell a property, ultimately someone's gonna have to see it or they send a representative. So you guys do a lot of driving. For your higher producing realtors, you can capitalize a high-end vehicle, particularly, like some of those high-end shows that my family watches in West
Yeah.
Palm Beach,
Like
where I
Barrett
see
Jackson.
yeah, I see
Yeah.
Camille Anderson comes to mind out in California, or Billy Nash. They come out in those Rolls
Mhm.
Royces or high end Mercedes and Lexus. You can capitalize it. I think this year, if you bought one for end of the year and justify the business usage, you can capitalize 60% of it as depreciation year one.
Did you know that you can participate in class every Monday? We call it Monday Night Live, 7 p.m. Eastern, with me and dozens of other investor agents from around the country, in fact, the world. Every Monday, totally free. No selling, no recruiting, just straight up education on anything and everything in real estate. And we have a lot of good guests coming on once or twice a month, bringing in expertise on subjects like how to buy a house with crypto. Okay. How about them apples? What about AI? How's AI affecting our business? How about the metaverse? blockchain process, and we're already using it in title work. So come on to Monday Night Live, be ready to take notes and ask questions because it's live and engaging, and you get to participate by asking questions and meeting others. So we'll see you there. Go to realestatewithgarywilson.com, click on the resource tab, drop down, and you'll see Monday Night Live. And in there, you can see one of the most recent classes. But more importantly, you can register for class as many as you want going up to like the end of the year, I believe. So in any case, do that. We'll see you on Monday Night Live. Look forward to meeting you in person. Take care. Nice.
Yeah.
Well, that's a big bonus. I know people too that in real estate, and they're they're investors, but they also set up a contracting entity. So they're the GC, they're a general contractor, even though they're not doing the work. But I don't know all the rules about this. I mean, you actually you might they're buying like a large truck and it meets a certain gross weight requirement. I
Six
think it's like
thousand
six.
pounds. Yeah. There are
Yeah,
sedans that meet that, by the way. Um,
really.
yeah, it's called the gross vehicle weight rating. You should always look that up before you buy your car. You'd be surprised
Yep.
on people, heavy trucks, but think about limo drivers, they get the 6,000 pound for the fancy Continentals. People are now using
Mhm.
Mercedes in that line. Some of the Cadillac sedans meet
Yeah.
that weight.
Yeah. And what is it? I mean, one guy told me, I swear he said he got a check for $27,000 from the IRS because I don't know if he how that how that works, but I guess he met the requirement, or his vehicle met the requirement. It was like the year after he bought it. I don't know if he had to do an amended return or
He
something.
may have
I
done
don't
an
know the
amended
details.
return, and also we have a client that his tax return, he's an investor. His previous CPA did not check that he was a qualified real estate professional, to where that his passive investments would offset ordinary income, and so he's due a check of $290,000.
Nice. Holy
Yeah.
smokes. So what that is, in other words, if you're, um, I guess a little bit of background here. So I've been an investor far, far longer than I've had a real estate license. I didn't get my real estate license to be a traditional realtor. I got it to do more investing. I just happened to build a brokerage company that focuses on investors. But the reality is I had a lot of properties too. At one point, 250, properties. And
Ooh,
my tax accountant told me early on, he said, you qualify as I forget the term, but he said, you're
qualified real
doing
estate professional. Yeah.
yes. And it gave me a lot more tax benefits. So I wanted people to know this. I don't care if you're an engineer or a dentist, whatever, just get your license. Chances are you're going to spend enough time on your properties as long as now I had all my properties set up in LLCs, of course, and things like that.
Yeah.
And I did have an S corp set up for me. So, but is out of that, if you could walk us through that, because I want people to hear this, it's not that complicated. If I can do it, I promise that they can do it. But there's certain things, certain steps to follow when someone, a professional in another industry, is looking to invest in real estate, in some of the steps that they can take, to take advantage of these rules. Hmm.
Right. So I'm going to go over the rules. Basically, qualify as a real estate professional, you have to perform more than 50% of services in real property trades or businesses. You perform 750 hours or more service in real property trades or business. And then you have to meet what's called a material participation test. Now, one thing, the IRS courts do get real sticky on if you have a W-2 job that's not in this industry. However,
Mhm.
what you can do is that if you're married, you could have a spouse that, maybe a stay-at-home mom or dad, and you can have them qualify, or as a CPA mentor used to joke with us at conferences, for us single people to marry a realtor. So if you know a real female realtor that's available for me to marry, that would help me too.
That's awesome. Yeah. Okay. Now that part I didn't realize. So really, you could marry someone has a license, and then the
Yeah, if
combined
they meet the
effort.
material participation test, absolutely. Because remember, when you do married, file, and joint, then you can use their status
Yeah.
and you can benefit as well.
Yeah. So now, is there anything people can do? And I wish I could remember this rule. This goes back years. I actually sold all my properties, and I'm a lot more passive now. Still involved, obviously, but more passive. But in any case, there was a couple years where we used I think it was Tax Rule 172, something like that, that allow us to expense something like we had. Let's say we had to put a roof on, which generally you would um, depreciate, along with the house because it's a roof, right?
Yeah.
That's a major capital expenditure. But because we structured the holdings in business entities like LLCs, that opened up the possibility of using Tax Rule 170. I think this was what happened. And I know there was debate about it. He said, look, we're if it goes to an audit, we've had that happen. We're winning. We're
Yeah, you can do
because
it on
we've got
using cost segregation and get the bonus
okay,
depreciation if you install a new roof. Because
okay,
and, and particularly you can bonus it, especially if you have to replace it. But you want to use a reputable agency. I have a client who has a real estate investment, and her return was audited where we did the cost segregation study. So we sent the report to the state auditor in California. The guy called me. He was upset. He goes, I absolutely don't like this, but it's legal
mhm,
and there's gonna be no change. He hated it, made him eat
yeah,
it. I loved it. It's like finally got over on California.
oh yeah, yeah. California stuff. This comes up a lot on our podcast too. By the way, California, please forgive me. I don't do this on purpose, but I spend a lot of time out there myself. I mean, I would go out for 4 or 5, 6 months at a time and stay out there because I had a lot of business out there. And people would always ask, why don't you just move out here? And I'm thinking, man, that California is really tough on business owners. Let me tell you. I mean, it's
Yeah.
just not just the taxation, but the rules, regulations, all that. Good Lord,
Yep. Yeah, you
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 know?
have to have 401k contributions and the
Hmm.
workers comp laws. And so yeah, I have people who work for me in California, but they meet the test to be contractors. So my
Okay.
W-2 people are in Texas for that
There you go.
reason.
Yeah.
Yeah. And I do
Yeah.
pay California taxes every year for my offices out there, by the way. So I do pay my fair
Yeah.
share.
Yeah. Hey, different subject. Well, obviously related to the IRS and taxes. Um, I've been audited probably 3 times in my life. 2 times it was just simply they just wanted a piece of information, and I did it
Yeah.
myself. I gave them the facts. A PDF of what I had, that they asked for. And the third time was a full blown audit. It took like a year, but it's because I sold a major asset. It was a huge
Yeah.
influx of capital, and it just caused the flag to go up. But the thing I realized is, I was never worried the whole time, and so it was but there was always this myth. Oh man, you're getting audited. It's going to be bad. You're in trouble. But that wasn't the case with me. I mean, can you shed some light on that? I guess some of the myths of the IRS, things that maybe we're afraid of that we shouldn't be, or the
Well,
reason to be.
an audit doesn't necessarily mean you're in trouble. They just want more information. You could be selected
Yeah.
randomly or they want clarification. So, since you're in real estate, one of my developer clients got a notice they had invested in a conservation easement. And so the IRS said that we did not send the valuation document, which we did send. We had proof of it. So we resubmitted it. They had disallowed it, say, we need your form 8283. So we sent it. And then not only did it result in a no change, they sent my client, unbeknownst to me, an extra refund of 99 grand. Unfortunately, I couldn't bill for that because I'm not allowed to bill based on refunds.
Oh, wow. Yeah.
Yeah.
That's a that's actually a really nice car. Nine
Yeah,
thousand. That
exact. I wish
yeah.
it's funny. He did buy a new car recently, actually. That
Yeah.
particular client. Yeah.
Well, I'm glad you said that. Because really, the big one for me actually ended up in uh, there was no change. There was a net zero change. And the agent did say she appreciated my cooperation because every time she called, well, remember, I'm any given day, it could be California, Illinois, New York. I mean, but when
Yeah.
I was home, I would go to the office and say, look, I'm going to be back on Tuesday. Would you at the office? We can use the copy machine there, photocopy anything you need. And she was always agreeable to that, of course. And
Yeah.
but also when I was traveling, I stopped what I was doing and gave her what she needed. After a year, a long year, and a lot of involvement, she said, we're satisfied. You've done everything correctly, and thank you for being so cooperative. Big
Yeah.
lesson in don't fight them if you're not going to, you know, that's a tough battle. But what are speaking of things like that? What are some of the most common things you see consumers do that they shouldn't do, or maybe they could do that they're not doing? I guess we can call them mistakes or errors or oversights. Mm.
Um, a lot of people don't keep track of their expenses when there's a lot of tools like QuickBooks, Zero, FreshBooks. You should, if you're in business, you should have some sort of bookkeeping system, and a lot of them you can tie to your bank account or credit card. So that's the first thing. Second, particularly your industry, since people in your industry, and you mentioned yourself, you move around a lot, they don't track their mileage. So I personally use an app called Everlance where
Mhm.
I turn on the location services and it follows all my movements, and then I separate between personal business trips. I was audited in 2017 on my mileage because when I started my business, I didn't have an office. So I was literally driving my hybrid everywhere in Southern California. And the IRS said that we flagged this because this is
Mhm.
unusual in the industry. So I went to their office, and so I printed the report. It was like this big. I had a big stack, and I said,
Okay.
here you go. They looked at it. 30 minutes later, they were satisfied, and the lady admitted, well, you actually are owed bigger deductions, but I'm not going to give it to you. And I looked at her side eyed, said, are you serious? She goes, yeah. This is I'm not going to help you out like this. Like, okay. But there was no
Oh
change in
wow.
that deduction. Yeah. So they
Yeah.
had to spite me back. Apparently, I missed an extra few thousand miles.
Yeah. Oh well. Well, hey, at least you use the code. Now, speaking of the code, I know people are going to think I'm crazy for asking this question this way, but I learned it early on in my business career that this is something I can actually use to my benefit as long as I understand it. But I don't really have the time to understand it, but my tax accountant does. Well, in any case, we were started using more and more of the rules that were given to us, allowed any U.S. citizen, anybody that pays taxes in the U.S. And then I met a guy named Robert Kiyosaki. A lot of people know who he is,
Yeah.
obviously. Got to spend a day with him, and he said, no, the code, think of it as your friend. Think of it as a team member on your team. And you could let him ride the bench the whole way through. You could let him get in the game and work for you. You got to decide. But if you could elaborate on that, I mean, there's no way I can quote anything in the IRS code because it's just too big. But
Well,
are there some examples of things like that in modern, current history? Maybe like here's one: the opportunity zone legislation that
yeah.
came out is still in place, by the way, because
Yes.
everybody's telling me they're doing really well with it. But are there other examples like that, things like that we
Sure.
can use, and maybe we should be doing more that we're not doing?
Okay. Well, in the cover of my book, there's a quote when you first open it. So I'm going to
Uh-huh.
read it to you that summarizes from Judge Learned Hand. He was a tax judge. He said, in America, there are two tax systems, one for the informed and one for the uninformed. Both are legal. So
Awesome. Yeah.
the the best, see, some examples that come to mind are, for instance, Peter Thiel
Mhm.
was able to use and be able to put his investment in Facebook inside a Roth IRA.
Okay.
Um, Today he is now 2.5 years away from accessing those billions of dollars that grew tax free post tax. Right, Mitt Romney put his Bain Capital Holdings in a traditional IRA. He has a
Mhm.
couple hundred million. So a lot of people don't realize the tax code allows you to self-direct your IRA. You can use
Mhm.
that to invest in real estate or businesses, but there are rules on participation before you can do, to make those investments. I'm not going to get into those rules, but that's a big one. You can also do Roth conversions. You can convert part of your,
Mhm.
which depending on who's in office, I'm not here to take sides, that may
Yeah.
come to an end. But if you're having a bad year, you might be able to take the tax bite. Or for some of my high network, one of my high network clients, we're looking at for him to bump his income a little bit so that he can get the next bracket to take advantage of mitigation strategy. He can take some of his IRA and convert it to Roth because he makes too much income to invest to Roth straight up. You can
Yeah.
invest money into your children's Roth. You can also, if you have a business, you can legitimately hire your kids and you can use that money as income, get it tax free, and have them pay towards some of their tuition in college or private school. So those are
Okay.
some examples that come to mind. There are a lot more, but I don't want to put people to sleep, but just to show you there are legal ways because again, it is the largest single entity book.
Yeah.
Most books that are larger than that are in series, but one book would be the US tax code.
Yeah. Yeah. Oh boy. Hey, speaking of books, let's talk about your book and is it on your website? Can people go to Amazon and actually
Yes.
what's in the book? Like the table of contents, so to speak, you know?
Okay,
Hmm.
I'll read you the table of contents. So
Okay.
we have three parts. So part one, we say who this is for, my promised introduction, and then we have 7 chapters. Chapter one, why smart tax planning is good for everyone, why your CPA may be letting you down. Chapter three, debunking tax myths, the truth about high income tax planning. Chapter four, the power of vetted tax strategies. Chapter five, supercharging retirement accounts. Chapter six, protecting your legacy with smart estate planning. Chapter seven, your next steps towards financial freedom. And then you can find our social media there. You can find it on Amazon. I did make bestseller in a new release in 2 categories: business and personal taxes.
Yeah.
If you can also go to our book website, it's greattaxescape.com, where you can get a free e-copy. And if you want to make an appointment with us, there's a link where you can do that.
Okay. So it's the Great Tax Escape is the book, and the website
Yes.
is
Well,
thegreattaxescape.com.
it's Great Tax Escape. There's no the. We couldn't
Yeah.
get the. So it's greattaxescape.com.
Gotcha.
You can also find our social media page on Instagram, Facebook, and Twitter under, if you type Great Tax Escape, you'll find our account where
Okay.
we are starting to post content as well.
Awesome. Okay. Well, I'll tell you what, I know we're probably at that magical half hour, but one more question, because I
Yes,
want
sir.
people to come away from this with something to do. So let's talk about tax planning. Here we are, end of the year, and by the time this gets published, it may be the beginning of the new year,
Yeah.
2025. But what are the best things that people can do in preparation? How can they do something now so that they're not on April 15th thinking, gee, I should change this and change that. And then no, I mean, what can they do in advance? So,
I would look in, if you're a business owner, you can get a deduction for investing in a SEP IRA or solo 401k. So I would look at your retirement planning.
mhm,
I would look at setting up an Augusta rule. I would also look and talking to your accountant and estimate what your income's going to be. If you're even if you're high W-2, you can do, you may not be able to do a SEP IRA, but high W-2, there are strategies involved. I've worked with a guy it was a high W-2 for a tech company that's well known. We were able to not only mitigate his tax by more than 50%, but he got refunds of $290,000 for year 2023.
that's nice. You can still buy a house for that in some parts of the country, you know?
Yeah,
So,
yeah, some parts, not as many as they used to be, but yes.
oh yeah. Well, I tell you what, I really appreciate you sharing all this. I know we jumped around a lot. I take full responsibility for that. But when we have someone like you on our show, it's like I want to cover everything. We should probably have you back. In fact, I teach a class called Monday Night Live, and that's a live event. Obviously, people are actually
Yeah,
there from all over the country. I'd love to have you do that, and matter of fact, if you're okay with that, I'll do an email introduction. Um,
please do.
Yep, because you'll get people the same audience on the podcast. A lot of them are on the team, and we open the class up to everybody. I mean, anybody can come into the class. It's not there's pay for anything. It's there's no we're not selling anything. Nobody's recruiting anybody. It's just straight up education. And usually twice a month we have a guest teacher on, and I think you're a natural. And so in any case, for everybody listening, make sure you leave a review because for Eric and I, that's your review is how this podcast keeps going. We don't actually get paid for this. It's a community service, allows us to network. I get to meet Eric. He knows a lot of cool people. He gets to meet me. I know some cool people like you guys listening. And that's what makes it go around is your review actually makes it keep going. So really appreciate it. And go to greattaxescape.com. Check it out.
Yes.
See how you can get in contact with Eric there. Get yourself a copy of the book. I'm an Audible guy myself. I like to read, but I'm
Yeah,
actually
we're working on the audiobook. Me and my podcast co-host Drew Lasker from the Sports Gumbo. We will be recording. Probably won't be out till next year, but we're working on getting that started.
nice. Good work there. So, well,
Yeah.
Eric, thanks again. And thank you for listeners and watchers. We appreciate you. God bless you and your loved ones. And we will see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.